There's this idea that perhaps credibility is at stake here for the RBA. Which way will they lean given what we know from the recent data?
Morning, Heidi. Thanks so much for having me on. Well, I think either way, the RBA has left the door open for another rate rise, but equally it can justify keeping policy on hold. So I don't think that their credibility will be damaged whatever decision they make at tomorrow's meeting. They've clearly said that they're very data dependent, probably more data dependent than ever. I mean, obviously all central banks always have to look at the data quite closely. But this time around, because the inflation data moves so quickly and is likely to be very volatile over coming months, it has been given all these one-off disruptions to the supply chain process and food prices, all these different things. I think that the RBA can definitely still hike the cash rate tomorrow. Now, our base case is that they don't. We think that the RBA is done raising rates, but the market pricing for a rate rise tomorrow is still way too low.
What are some of the global factors would also be in play here? Because we see the unevenness, right, over the Chinese recovery story. What was your takeaway given the PMI numbers and yet the extremely strong, travel and consumption numbers that we continue to see?
Well, that lack of that manufacturing rebound in China, or maybe not as strong as that services rebound, is that's probably one of the key reasons why commodity prices haven't been jumping up too much over recent months, especially for things like iron ore. However, the impact to Australia is really, where would that iron ore price have been if we didn't have that strong recovery in China? And the iron ore price is still much higher than Treasury forecasts were at the budget last year. So there is still a massive boost to Australian national income, and we're probably going to see the budget deficit for this year reduced quite significantly. The latest numbers from the government suggested that the budget could actually be in balance for this fiscal year. So commodity prices are still holding up relatively well, even though you haven't had that strong manufacturing rebound. The Aussie dollar could probably be a little bit higher if we did have more strength from Chinese industrial and manufacturing production. But I think that for the RBA, the key global thing that they're looking at is if there's been any further stress to the banking system from the banking crisis that we had in the US and also in Switzerland in March, whether that's flowed through. We have seen some, uncertainty in terms of First Republic, but I think it's pretty much contained to First Republic. We haven't seen any flow through to the Australian banks.